that, you know, sometimes these things kind of break back under. So we'll have to kind of keep mindful of that. So morning, everybody. I will be trading probably more than a handful of mid-stays. I got to run back to the house. I got to check on it, see if there's any, you know, flood in or whatever, drain that swamp a little bit. But I think everything should be okay. It looks like our particular area wasn't dusted. So I'm excited to get out of this, you know, janitor's closet and cruise home and do what I got to do. If anybody is going to Traders for a Cause or lives in Las Vegas, let me know. Hit me up because I'll be there for a couple of days for, you know, Traders for a Cause. So, you know, we can get some BS, if you know what I mean. Cool. All right, let's get to work. So look, today I think, you know, the keys would probably be you want to just stay away from all these gappers for the most part because they're all going to be duds. You know, even with the market kind of moving up slowly pre-market, it's still gapping down a little bit here. We very well may hold at this 200 SMA, but we could break back under too. It's going to be 50-50. When you're oversold and you've come down this far, like theoretically you should bounce. But bounces are like never that easy, like where they're just like always linear events where it's like, oh, because you just ran into the 200-day moving average, like all of a sudden, like, right, you're going to shred to the upside. You know, if you see in the past, like how bounces typically work, when you come back, you know, even if you drop really big, you know, see how like you round. So like there's a few days of choppiness where you're like, bounces can be really frustrating because you get a few days of choppiness where you're like, oh, like I should be bouncing here. I should be bouncing here. And then, you know, you get a green day and then a red day and then a green day and then a red day. And then you go and you're like, fuck, like I just chopped myself out of this, right? I chopped myself out and now the market's gone. And see, the last time you pull back, like it takes a couple days. So like theoretically, we're really oversold and like really we've come down a far way. But, you know, it could be a process where it takes a couple days if it holds here. So that's where you've got to be really, really mindful of, you know, what's going down. The SPY, same thing. It's got a little bit of room maybe to fall. It's really rare too. It's kind of cool though. You never see a move from the 50 SMA to the 200 SMA in like one day, right? Like how many times do you ever see that? The SPY is gapping down too. So it's like, you know, with the move gap down in the market, I mean, theoretically, we could keep flushing today. And that's something that you know, just something, you know, to keep in mind of like, see, it's 277 here. So we're gapping down just a tad overall. So when that happens, I kind of keep some of these, right? Keep this TVIX on your watch list. Obviously, when you get something like a TVIX, what it's doing, right, is, you know, what it's doing is as it goes up, it's shorting the market. So you guys can come down and play this thing. You know, we had a decent entry on this thing yesterday at the open on this VWAP pullback, but then, you know what, like an idiot, I was off my timing the last couple of days. I was doubling up at the wrong spots, and things got a little bit wild over here. Hey, Bonsi, how you doing? Hey, Roberto, what's going on? Hey, local channel, how you doing? BB, what's up? Kent, how you doing, brother? So I think today, you know, if the market gets nasty, keep this TVIX on watch. You can see it's like a longer term kind of breakout over here. You know, you don't have any resistance about 43.31, but then if you pass 43.31, you have a gap here, 45.46, and then you don't really have any real, you know, resistance back up to here. Now, obviously, this is 3x, you know, ETF, so it doesn't mimic exactly what you see, but it does have that volatility aspect of it. So, you know, for today, I'm trying to stay away from some of these gappers because like yesterday, like this Naya was Dick. See, when you have gappers like this, they fade off they fade off during the day. So unless you're living like, you know, short squeeze life, right? Like this floor I like. So this thing is gapping down on bad earnings. Pre-announces Q2 revenue below street estimates. So if you're announcing below street estimates in this type of market where it's so nasty, then this is a good candidate for an ORB. It's only got 125 million share float. So, you know, you may pop down and then you'll go sideways for a little bit and break down. Or, right, the other thing is because it, you know, it is going to open down 12%, the SSR is going to be on. Watch it pop and then watch it kind of pop into the 9 EMA. And, you know, that could be a good spot to hit it. So, you know, keep an eye on that 9 EMA. S2 is just getting, hey, buddy. SQ's been getting smoked out too. SQ's been getting smoked out too. It finally broke under this 50. So you are gapping down on this thing again. I mean, frankly, it should be a long at this point. But now that it's like broken under these supports, like you may get some continued downside to it. You know, I'm almost wondering if this gap down is like a rubber band long, like an exhaustion gas. But either way, like this is a good trader. You can play it both ways. So see which way the gap holds. You know, obviously, if it flushes down at the open and you start to see bear flag action, you take it. But if the gap comes down and it goes red to green, then, you know, you want to start looking at this thing for a long. So yeah, NVIDIA at a bounce spot. You got 200 SMA over here. I keep that on watch, right? AMRN is on your 9 EMA, so bounce watch. If the market just starts ripping to the upside, right, you can use TNA. It was down 8% yesterday. This is an ETF for small caps. You got SQ and then Roku. But look, all of these names, frankly, because they've cut supports, if the market gets super nasty, you'll be able to long them too. They have the liquidity in the range. When the market gets nasty, they'll basically move like a small cap. You know what I mean? Where you'll be able to kind of come in and really shred these things to the downside. Anybody shorting any of these cryptos? They finally kind of cracked yesterday. Dun, 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 dun. Yeah, I just keep a really short list at this point. Look, you know, as traders, we kind of live for the volatility of the markets, and it's like supposed to be this fun thing. The volatility also leads to more mistakes. It leads to more chasing, more FOMO. So, you know, when you get range like this, I think the best thing to do is like really cut your position size in half, you know, because you're going to get a lot of range. And so, like, even if your timing is off because the volatility is too big, you know, if you cut your position size down a little bit, you can handle the ebb and flow of how the market is moving and make sure like you don't get chopped up. And that way, when the market does rebound, like you've got really, you got a little skin in the game to kind of keep that thing going, right? Last thing you want to do is like, I do this all the time, is like, you know, you blow not just your capital, but your mental capital, right? You're like fighting the tape, or you're trading too big or too much size or too many shares. And so then you just take all these kind of, you know, pity-patty loss, or what you think is small loss, but then they start adding up into a bigger loss. And before you know, you've blown your mental capital, but also your physical capital. And then when the real move starts to hit, right, you're like nowhere to be found on this thing. So just something to kind of be mindful of. Cool. All right, well, everybody, trade well today. We got to go do what we got to do. Watch this Ethereum today. It looks like it cracked that 200. You may be a decent short. All right.